If you're trying to buy your first home in Australia, you've probably heard about the government's 5% deposit scheme. And if you're like most people, you've also heard a dozen different versions of how it works, who's eligible, and whether it's actually worth it. So in this video, I'm going to break it down step by step. No jargon, no confusion. By the end, you'll know exactly how the scheme works, whether or not you qualify, what the price caps are in your state, and honestly, whether you should even use it or not, because it's not perfect for everyone. This is probably the most important video you'll watch if you're a first home buyer in 2026, so stick around. All right, let's start with the basics. The first home guarantee, which most people call the 5% deposit scheme, lets eligible first home buyers purchase a property with just 5% deposit without paying lender's mortgage insurance, also known as LMI. Normally, if you don't have a 20% deposit, your lender charges you LMI to protect themselves. On a $600,000 property, LMI can easily cost $15,000 to $25,000. That's real money. Under this scheme, the government essentially guarantees the difference between your 5% deposit and the 20% threshold. So the bank doesn't charge you LMI. Now, to be clear, the government is not giving you money. They're not contributing to your deposit. You still borrow 95% of the purchase price. You still pay it all back. The government is simply acting as a guarantor for that gap between 5 and 20%. The scheme was expanded significantly in 2025. It used to be capped at 35,000 places per year. Now it's open to most first home buyers. The places cap has essentially been removed. That's a massive change. So who's eligible? You need to be an Australian citizen or permanent resident. You need to be 18 or older. You can't have previously owned property in Australia. And if you're buying as a couple, only one of you needs to be a first home buyer under the expanded rules. Your income matters too. The income thresholds have been adjusted, but the key thing is they test your taxable income, not your gross income. So salary sacrifice deductions, these can actually help you stay under the threshold. Now the price caps. This is where it gets state specific. In Sydney, the property price cap is 1.5 million. In Melbourne, it's 950,000. Brisbane, 1 million. Perth and Adelaide have their own caps. These caps are for the total purchase price, not the loan amount. Here's something that most people miss. These caps mean the scheme is most useful in cities outside Sydney. In Sydney, even with a $1.5 million cap, most first home buyers can't actually afford the mortgage on $1.5 million property. Your borrowing power is still limited by the banks. So the cap being high doesn't mean you can actually buy at that level. Brisbane, Adelaide, the scheme becomes genuinely powerful because properties are more affordable relative to the caps. Let's talk honestly about the pros and cons. The biggest pro is obvious. You get into the market years earlier. Instead of saving 20%, which on a $700,000 property is 140 grand, you only need $35,000. In a market where prices are rising 5 to 8% every year, you're not in the market, you're falling further behind. You also save the LMI cost, which can be tens of thousands of dollars, and you're not locked into a specific lender. There are 31 participating lenders, so you can still shop around. Now the cons. You're borrowing 95% of the property value. That means higher repayments, more interest, and less equity buffer if prices dip. If your property drops more than 5%, you're in negative equity. That's manageable if you're holding long term, but it's a real risk. There's also an argument that the scheme pushes up prices at the lower end. When more buyers can enter, demand increases for affordable properties. Totality data already shows the lower quartile of homes values is rising fastest since the scheme was expanded. My honest take, if the deal makes financial sense, the location has strong fundamentals, and you can comfortably afford repayments with a buffer for rate rises, the scheme is a smart tool. If you're stretching to your absolute maximum just to use it, think about pumping the brakes. Let's recap. The 5% deposit scheme lets first home buyers get in with just 5% down and no LMI. The government guarantees the gap. It's been massively expanded, so most first home buyers now qualify. Use it if the deal makes sense on its own merits. Don't just use it because you can. Do your numbers, factor in rate rises, and make sure you've got a buffer. If you're a first home buyer and found this helpful, please subscribe. I'm building a whole series around getting into the market in 2026. Drop a comment below. Are you planning to use the 5% deposit scheme? I read everyone. I'll see you in the next video.